Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer, who's back from a refreshing holiday. You've come back to markets which are higher. For now, though, slightly off from the highs of the day. But I think bulls would take it from both hands, considering the sharp fall that we've been seeing.
That's right. So in the week gone by, there was a lot of volatility. Yeah. But, if you're back after a week, Nifty is where we left it at.
Yes.
But quite a lot lined up on the show. Let's start off with the top headlines. Stock give up some gains to trade near the day's low after a gap-up start. PSU banks, along with oil and gas, are the big gainers. Mid-caps fare relatively better.
The Maharashtra election sweep by the BJP-led alliance powers up infrastructure and realty stocks with significant exposure to the state. Realty experts see a focus on infra spend driving growth for the sector.
In an important constituent reshuffle for the benchmark BSE Sensex, Zomato will enter the index on December 23rd. Stock gains nearly 6%.
Shares of IGL are higher as the city gas distributor hikes prices by 1.5 to 4 rupees a kg in different geographies. Prices, however, have not been hiked in Delhi, which forms around 70% of the company's total volumes.
Nalco sees selling pressure and it is the top laggard on the NSE small cap index. Stock down nearly 3% in trade.
Okay, a 300-point gain on the Nifty is what we are looking at. As I said, slightly off the highs of the day, but it's the PSU banking rally which continues. We have seen a lot of contribution coming in from these the public sector names. On the index, as you can see, there was a small dip which has been bought into slightly. But other than that, if you look at the mid-cap index, that is surging now, or more than 1,000 point of a gain that we are seeing on the mid-caps right now. It's up around... it's up almost 2%. The Bank Nifty is up 1.8%. And a lot of these heavyweights, they are contributing to the gains that we are seeing today. So it's an all-round uptick that we are seeing, and a lot of stocks in focus as well.
A lot of stocks in focus. Markets doing very well. Most of the sectoral industries trading with gains. The India VIX is down almost 3% in the session, indicating the kind of up move that you've seen over the last two trading sessions. But Hormaz is standing by the wall. This is our special segment, Mid-Cap Movers. Hormaz, take us through the mid-caps that are moving in the session.
Well, on a day like this, it's very difficult to find underperformers, but we'll talk about them slightly later. We start off with the top movers, then within the broader markets. And a 1,000-point move on the mid-caps, you're spoiled for choice to pick the outperformers. But IRB Infra is the top gainer on the mid-cap index so far, 7.5% higher there. A good move seen in Triveni Turbine as well as in Cummins India, now 6% higher on the stock. NCC has seen some bit of cooling off from the highs, but holding on to gains of around 5.5%. The railway PSUs are making a comeback in today's trading session, recovering from the lows. Mind you, all of them have corrected almost 30 to 40% from their peak. All of them are off the highs, but still holding on to gains of anywhere between 4.5 to 7.5%. The non-defense PSUs as well, almost every constituent on the PSE index is trading with gains here. NHPC, HPCL, BHEL, some choppy moves, but still all of them gains of over 4%. Stocks trading on the back of very strong volumes in today's trading session. As LG Equipment's now 12.5% higher at the highest point of the day. Indian Bank has a new MD and CEO. At one point was up 12%, is cooled off from the highs. Poly Medicure is up 10.5%, and Siemens, ahead of its results tomorrow, is trading with gains on very strong volumes. And now we come to the list of the underperformers in today's session. Vijaya Diagnostics is at the lows of the day. Nalco has seen some buying from the lows, but still down 2%. Jubilant Pharma and Bharti Hexacom has slipped to the lowest point of the day in what has been an otherwise very strong market. Back to you guys.
Okay, so we win some, you lose some. So those are some of the losers in the market. Thank you so much for joining us as always, Hormaz, and telling us the stocks that are on your radar. Let's slip into a short break. Management of Dhanuka Agritech will join us next to discuss their pact with Bayer AG and the outlook going forward. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. The stock on our radar is Dhanuka Agritech. It has signed a new agreement with Bayer AG for acquisition of crop protection active ingredients for 2 products. To discuss the synergies of the deal, the consideration that they've paid, and what is the growth outlook from here on, Harsh Dhanuka, the Executive Director at Dhanuka Agritech, is joining in now. Harsh, good afternoon. Thank you so much for joining in today. If you can start by telling us what is the consideration that you've paid for getting these rights to sell these two products in India and globally, how will you be funding it?
Yeah, so good afternoon to you. And so consideration we cannot share at this stage. Only after the closing we'll be able to share the consideration amount. And with respect to the funding of the consideration, it will be partly through internal accruals and partly through external sources through bank financing.
Okay. Could you give us a broad range of, what is it that you're expecting to pay? You don't have to give us an exact number. And also, what is the market size or the opportunity for these two products? What is it that they've been garnering as far as FY24 was concerned?
Sorry, I am not able to share any revenue numbers as of now. But soon we'll come out with the revenue numbers, especially in the next quarterly update. We will definitely share much more details about the numbers.
Okay. So Harsh, you're not able to share certain details because your agreement also says that there are certain closing actions, and that is only when you'll be able to give out the details of the agreement. What are these closing actions? Is it that you fulfill certain terms and conditions that are put forth by Bayer? Can you give us an idea on that? How long will that take to be completed as well?
Yeah, so closing actions include one, of course, is paying the consideration amount, signing off the balance agreements, which are part of this, and it is expected to be completed in the month of December.
So from Q4 of FY25, can we expect you to start selling these products in India and globally, and these revenues will start reflecting in your P&L?
So in the P&L, the revenues will start reflecting from FY26. And initially, we'll start getting the royalty payments after the closing of the agreement.
Okay, so you've mentioned that you have it, you have the marketing right, both in India as well as abroad. Now, is this an equal opportunity in terms of revenue share, both within India as well as abroad? And if you could share, I'm not sure whether you'll be able to give us any details, but what is the kind of split that you will be having, and what is the kind of split that Bayer will be having?
The entire revenue over a period of time will pass on to Dhanuka. And the India split is smaller, and the international piece is much larger.
So, Harsh, the question that arises is Bayer itself is an MNC. It has its footprints in Europe. It has a company in India as well. Then why this agreement with Dhanuka? What is it that you will be able to do that other companies globally or their setup won't be able to do? Because as you're saying, the split in terms of revenues will come in more from markets abroad. So can you explain that rationale to us?
Yes, so for Bayer, these products are not part of their key portfolio, and being an innovation company, they are coming out with new products. So they wanted to divest these products. And for Dhanuka's perspective, of course, it gives us an advantage to make our market presence in international markets beyond India.
So how much can you increase your export revenues by then? Because I don't think you have a bigger export pie currently, right? How much can you add on to it? And will FY26, if you can tell us what is the export percentage right now, how much will it increase to in FY26 once these products come in your portfolio?
So currently the export contribution in our portfolio is less than 3%. In FY26, it will increase substantially. Sorry, I cannot share the number as of now.
Okay. Harsh, let's ask a few qualitative questions and understand the process through which, you got these two molecules on board. First was there a pre-approval process, that you had to go through in order to get this particular order from an MNC? In that case, are you now qualified to go ahead and get more such molecules? And do you have any kind of agreement, that you are exclusive, to market products only with Bayer? Or do you also have opportunities from other MNCs to onboard their products?
So these are actual acquisitions of these two products. So it doesn't stop us from partnering with other companies in the future. And as Dhanuka is working with a lot of multinationals for introduction of their products in India, now with the presence in international markets, we can explore our existing products to other markets as well. Having said, answering your first part of the question about the qualification process. So yes, the buyer team had a pre-qualification process, and there was some study and research done by their consultants in India, and we were able to qualify to that. And after that, only they considered our proposal.
Are you in talks with Bayer for onboarding more molecules?
I cannot say that for right now, but in future, yes, that is a possibility.
It would be a possibility with other MNCs as well, Harsh?
It can be, but right now, nothing is there on the radar immediately.
So, the consideration amount that you won't be able to tell us right now, but would there be any other marketing related expenditure that you'll have to take once you are able to commercialize and sell these products outside? Or that is it? That is the kind of expenditure that you'll see?
No, the marketing and regulatory expenses will be involved because we'll be transferring the registration of these products in Dhanuka's name. And over a period of time, depending on each country's regulations, we'll be taking up the registrations over there. And in terms of marketing expenses, because for buyer, it is not a part of their key portfolio, so they have stopped the marketing spends, but Dhanuka will be reinitiating the marketing efforts around these products because they are still having very good efficacy.
Okay, Harsh, you cannot tell us the revenue number right now, but are these high margin products? What does it do to your margin profile? Because the last time we spoke to you, the word was that you will be seeing 100 basis points increase in margins this year versus the decline that was expected earlier. Come FY26, with these products contributing to your P&L, do you think there'll be more margin accretion? Where do they fall in the margin picture?
So while I cannot share the numbers on the margins right now, but definitely they have a good margin profile, and the products
is it
will
higher? If you cannot tell us the number, is it higher than the current product profile? If you can give us just an indication.
Yes, sorry, I am not able to share that at this moment.
Okay, Harsh, not an issue with that. We basically wanted a trajectory, of the margin guidance. One question that we want to ask you is, at the end of Q2, you told us two things. Number one, as far as the revenue growth is concerned, you expect it to be at the lower end of the guided band. 16% versus what you had guided at the end of Q1 was 18 to 20%. Was that particular projection made considering, onboarding of these two products, or was that, not taking this into account? And also, similar question as far as margins was concerned, was this taken into account?
No, this is not part of any of our earlier statements.
And do you expect any contribution in Q4 at least from these two products? Because you're expecting to close it by December, right?
Some royalty amount will start coming in Q4.
Okay. All right. Harsh, well, we tried, but I think you'll be able to give us most of the details only after Q3. So we look forward to that. But thank you so much for joining in today and telling us that this is going to come on the P&L, some of it from Q4, most of it from FY26. The stock, though, is off from the highs of the day. But that is an important deal that Dhanuka Agritech has entered into with Bayer AG, Germany. We'll do one thing, we'll slip into a short break. On the other side, in our mid-cap spotlight segment, Vivek will put focus on infrastructure stocks with exposure to Maharashtra after the election win. Stay tuned. Welcome back. You're still tuned into Midcap Radar. Well, a couple of sectors doing really well. Realty is one of them. The infrastructure companies, all these stocks are surging in trade. Let's talk about them and the ones with exposure to Maharashtra after this election results. Vivek, you have the list. A lot of them are buzzing in trade today.
A lot of them are buzzing today. And in fact, let's look at some context in terms of what exactly happened to the infrastructure stocks in the run-up to this particular election as well as the election outcome. Number one, there were worries of any of the contracts that were signed just prior to the elections or in H1 of FY25, there were worries that, if a new government is formed, there could be cancellation of products there. Number two, capex wasn't really happening, ordering wasn't really happening. So that was also a big overhang for stocks. And number three, execution trends, especially, not really related to the election, but labor shortage was there, due to the ongoing election. So all of these worries actually led to significant underperformance across the entire infrastructure space going into this particular election. Now, given the fact that there has been a majority that is coming, quite a thumping majority at that, most of the management commentaries after Q2 indicated that execution is good, ordering pipeline is good, and that is something that they now start to expect coming in. Along with that, there was a recent large ordering which happened from MSRDC, which is the Maharashtra State Road Development Corporation. Quite a lot of stocks, or quite a lot of companies, in fact, had received large orders. So the overhang of any cancellation over there goes away. So names like NCC, HG Infra, GR Infra, PNC, Ashoka Buildcon, all of these stocks actually will heave a sigh of relief. Now let's look at some of the companies, the order book and the percentage of ordering activity that actually comes from Maharashtra itself. And on the back of that, you will understand, in fact, almost a direct correlation to the kind of relief rally you will be seeing in this particular names. J. Kumar Infra tops the list, quite a lot of metro projects in Maharashtra, in Mumbai especially, a very large project, from Malad, going all the way up to the eastern part of Maharashtra as well. So these particular names and these particular companies are doing quite well. Almost 61% of order book from Maharashtra. Ashoka Buildcon, almost 48% of its order book. PNC Infra, 47%. GR Infra, 36%. HG Infra, 26%. Afcons, 14%. Patel Engineering, 12%, and along with that, even names like IRCON, even names like RVNL, all of them do have tie-ups as well as JVs for various metro projects, various railway projects, that will pass through Maharashtra. So, whole host of infra companies have exposure to Maharashtra. Whole host of unlisted names too, have quite a lot of pending projects. And remember, H2 onwards, government capex is expected to pick up. Remember, NHAI ordering, like we've been mentioning, has been very tepid in H1. H2 is expected to pick up. So, ordering activity pick up, execution pick up, as well as continuation is something that the street is cheering today.
The big word is execution. For the sake of all the Mumbaikars, that's what we can hope, right? Those big projects, those big flyovers, the metro construction, that happens sooner than later, and we see some results there as well. That's about the infra space. Thank you for making sense of the moves, Vivek. The other stock on our radar is IGL. We've been talking about the big cut in APM gas allocation and Mahanagar gas last week, increasing prices. That's exactly what IGL has done as well today. Increased prices by 1.5 to 4 rupees per kg in different geographies, barring Delhi. Now remember, Delhi's price stays the same at 75 rupees a kg. But this is the biggest market for IGL. 70% of their total volumes come in from Delhi. But considering that there are elections coming up, the state elections, there is a possibility that the company has not gone ahead and done that. So only 30% of their volumes have seen a price hike. The prices required to be hiked by around 8 to 10%. This is around 1.5 to 4% of price hike that the company has taken. That also only on 30% of their volume portfolio. So yes, it will not help margins for now, but maybe street is happy about the fact that they've gone ahead and taken price hikes, which was not seeming possible because that could have hurt their volumes. The stock is higher, so is MGL, considering that maybe the price hike could help margins to a little extent, but not completely. That would require a steeper price hike.
Steeper price hikes, and one of the worries is that the steeper the price hike, it actually makes
volumes will be impacted. So it's a gamble for these companies.
Gamble, and clearly these stocks in focus, they've seen significant price erosion, and thank you so much, Sonal, for putting the spotlight on these particular names. But with that, it's all the time we have on this edition of Midcap Radar. Last hour especially will be in focus on the back of MSCI related rejig today, but stay tuned to your stocks when we return.